back to Block Viewer. It's time for Power Blocks. That's where we sit down with some of the major power players in the blockchain and digital asset industry to discuss recent developments in their projects and hear their takes on the latest news and trends of the market. Now, to do this, I'm joined in studio by none other than crypto regulation analyst and vice president at Bittax, Lokay Cohen.
Hi.
Always great to have you with me. And of course, today, a closer look at OKCoin and Tim Byun, the CEO, I hope I'm not butchering your last name, and brain behind OKCoin. Tim, so lovely to have you join us today. Where are you speaking to us today from?
From Silicon Valley this morning.
That's the place to be. So first of all, thank you so much for joining us. And before we talk about the present, let's talk a little bit about the past. Not too many people know, but you actually have a very old school background, so to speak, straight out of college. You graduated in '91. That was a recession year. You became an FDIC bank examiner. You spent about 16 years in the banking system, also several years at Visa after that. How does somebody with that background switch to crypto? When did it happen and why?
The switch actually happened in 2014. And to be really honest and humble, it was by sheer luck. I believe I was at the right place, right time, given my background in regulations, as you mentioned, for 16 years, and working for Visa most recently before the crypto revolution in 2014. I joined a wonderful company called BitPay out of Atlanta, Georgia, who wanted to mimic the acquiring model of Visa, basically enabling merchants to accept Bitcoin as a form of payment. And so that's how I got into the industry.
You got into the industry at the right time, indeed. But you ventured into Bitcoin with BitPay, what we call the merchant real usage side of Bitcoin, and then you opted to go the exchange route instead. Why?
Well, I certainly believe that Bitcoin will be used as a currency. It will be facilitating payments for goods and services. We're just not there yet. It's going to take a while, and it is coming for mainstream. However, presently, and I think for the near future, trading is where all the action is. People like to speculate on this digital good called Bitcoin, and OKCoin being one of the oldest and most trusted exchange, I thought was a perfect match for me to continue my career in the crypto ecosystem.
You know, sounds like the right move. But before we go into regulation, for which both Or and I have many questions, you said that you think it's going to take some time. We're speaking on the week that many old timers, I would say, and I mean it lovingly, though, like Alan Greenspan, are constantly quoted as really, how should I put this? They do not believe in Bitcoin. And those are headlines that are getting a lot of play in mainstream media. So how far away are we from mass adoption in your mind if we still are living in this type of reality?
I think mass adoption could be as close or as far as a way of a mere 3 years or actually 30 years. Because the type of mass adoption that we all talk about is it's like spending for goods as easy and as seamless as a credit card, which we all have in our wallets. So Bitcoin and crypto requires, to be honest, a lot of mind share and to be careful because it is a final payment activity. And therefore, I think it's still going to take a long time to get to that masses, but it will. I'm confident of that. I just don't know how long it's going to take. You mentioned Alan Greenspan. One of his most famous tagline was irrational exuberance. And he said that many years ago before the crisis. And so even he doesn't know what the time frame is. No one does. But I think I am confident that the Bitcoin revolution is coming to the masses.
As you said, I tend to agree with you. I think the difference between 3 to 30 years though, is where we're all standing here with that million-dollar question. Let's talk about regulation, because I do think that mass adoption, and or I'm sure you'll agree with me, mass adoption at the end of the day will need regulation.
Definitely. Right now, we are watching the need every day for Bitcoin regulation. Otherwise, we cannot go anywhere with this.
And apropos that, Tim, exactly that. Let's talk exchange regulation in the United States. Where do you think this stands, in your opinion, right now? And why is it so hard to regulate the sphere for legislators in the United States?
Oh, great question. I think it's very difficult to regulate crypto because, for example, Bitcoin has many different functions. It is like money in the US. People forget, but FinCEN, a department of the US Treasury, defined Bitcoin as a convertible virtual currency, and keep in mind that last word, currency, as far back as April 2013. Therefore, Bitcoin activities as a money service business in the US was regulated since at least April 2013 with clarity. It is a requirement, like OKCoin, to have a Bank Secrecy Act-like AML compliance program in order to operate. Since April 2013 for the US. And therefore, I think the confusion and the difficulty is that at times, crypto will look like also a commodity regulated by the CFTC in the US, a security regulated by the SEC in the US, and therefore you have multiple regulators in the US kind of expressing their duty, their responsibility to protect the consumers and citizens of the US. And therefore, that's why it's so difficult. Unfortunately, the US is not like Japan or Korea, where there is one regulator, most likely called the FSA. And therefore, that's the complexity, and companies like us, we need to abide. And therefore, that's why we have 4 AML officers throughout the world in the various territories that we have entities and where we operate.
That's fascinating, Tim. Just one second, because, at the end of the day, Tim raises a brilliant point that there's too much government actually in the United States, and that's one of the things, at the risk of sounding like Ian Rand, but that's one of the things that hinders regulation.
Right, but there are also many issues need to be regulated as far as which coins can you register on your exchange, as far as anti-money laundering, AML, of course, and also difficulties like crypto exchanges. It's not like a regular exchange. You are not going home in there in the end of the day and you can say this was our volume, this was our trade. It's 24 hours. 7 days a week in anywhere of the world, so it's really hard to control by the regulator in one
area, in one
exactly.
zone. In one zone. And speaking of that, though, Tim, just because before we delve into OKCoin, apropos traditional systems and banks versus the new world, which you realized after 16 years, we're speaking to you today on the heels of several news in the mainstream media about both Facebook announcing Facebook Pay, and Wall Street Journal today exposed that Google is soon to offer checking accounts to consumers, making them the latest big tech company, where you're at in Silicon Valley, to push into finance. What do you make of that?
Well, I think these tech companies realize that they're not just in their narrow stream of business, but they always want to see how they can better serve the customer. And naturally, finance or financial services is a huge part of our lives. And therefore, they want to bring that innovation and simplicity with their technology and see if they could provide us financial services. I think these choices are awesome. It allows consumers like us to learn about financial products as well as finance, a very important subject. And so I welcome, and I would love to see new providers come in, whether it's a simple product like checking, or whether it's an innovative product like hopefully Facebook Pay, which sounds like Apple Pay or Samsung Pay, and we'll just see what the product is all about when it comes out.
See what the product's all about when it comes out, or I know you're a big, I don't want to say a big supporter, but you're hoping for Libra because it will make Facebook basically with the mass adoption of 2.3 billion consumers. But when you hear about Facebook Pay, doesn't it sound a little bit either like a beta for Libra or Facebook as Venmo?
I love it. Both Google and Facebook are now letting the Congress to understand that whatever they were afraid of with crypto, they're getting now with fiat money. Because what the main concern was that all those corporations will have now our financial data, and this is what the main concern, because AML and regulation can be fixed. But the main concern of Congress was that they didn't want Facebook to have all our financial data and Google to have all our financial data. And now they are getting it with fiat money. So the only thing that needs to be done now is just to understand that crypto will have a better way for them to understand what's going on blockchain, will prevent money laundering, and will help them to control it better than than fiat money, and will be more effective and reliable because it will be easier and faster than to transfer fiat money from one end to another. And that's it. We're done.
Tim, would you agree with that?
I would certainly agree that Libra, Facebook Pay innovations are good for the mass public. And it's because it's also a learning opportunity. There's a great debate today whether Libra is a cryptocurrency or not. I see Libra as a stepping Libra as a stepping stone to really Bitcoin, which is a cryptocurrency. The fact that they both use cryptography to try and secure that token, I think is amazing. But obviously, cryptography is a very technical subject, and I wish I knew more about it. I wish I can learn more about cryptography, but I think it's fascinating, the little bit that I know. I hope that Libra does come out. Yes, maybe Facebook was not the perfect company to introduce such a grand vision for their internal closed loop token that they sponsored and hopefully launched. But imagine if it was Amazon or Google. Would Congress have that type of scrutiny on a more favored company like Amazon or Google or someone else? But I think it's just a stepping stone.
It's very true. It's a good point. Would Congress have the same type of reaction if it was a different company? Now, a year ago, OKCoin announced that its expansion of token-to-token trading into 20 new U.S. states, and 2 months ago, you announced its fiat-to-token trading services that are now available in 7 new U.S. states. Meanwhile, Poloniex was the last one to close the gates for U.S. clients after Binance, Bancor, and many crypto companies. Does regulatory framework in the United States affect crypto exchanges' profits? And do you see, do you see yourself leaving the United States because of that? That's what I'm asking.
Absolutely not. We are committed to the U.S. We have our second office established in San Francisco as of June 1st, 2018. It's our permanent office. We are up to a staff of 33 today in our San Francisco office, and we love the US. We feel that we could invest and we could abide and execute with the various regulations that are in the US. The one thing people forget is, the flip side, we have regulations, it is costly. It does affect profits, but your main question about profits, there's many other factors affecting profits, but regulations is costly, it is burdensome, but it also provides a framework that you can build on for the long term. And so that's what we love. So we are building up our compliance team, our legal team, our controls, but we're in it for the long term. And we are actually, I'm happy to say, we accept fiat for 21 states now, up from 7. So we are
Wow.
progressing, and we look forward to progressing even further.
So, or I'm wondering with you, because Poloniex did leave and Binance, had their, stepping out of the fray, so to speak. OKCoin seems in the long run, because they understand regulatory framework is important. Would you say that the others didn't understand that?
Well, I think, and Tim, you know that better than me if you are doing it or not, the best way is to sit down with the SEC and to understand, because Howey test is very old and need to be updated. Since if you are looking at the Howey test, basically there is no utility token because you can make profit out of it. So there is no really a utility token. But if you will sit down, I don't know if you have, but if you will sit down with the SEC and have a clear guidance of which coin can you list and which coins you cannot list, then you will then it will be able for other crypto exchanges to understand what is coming for them, and to maybe to see if it's worth it or it's not worth it.
Well, Tim, wondering with you, did OKCoin sit with SEC regulators? Was this done in the past?
Absolutely. The regulators are becoming more available, hosting these information sessions, and really conducting outreach to the industry. And therefore, we have met with the SEC as well. The reason why is not so that we can trade Bitcoin, which is a convertible virtual currency, which the SEC has stated that it's not a security. Eventually, we would love to trade securities. Obviously not IBM stocks, that's not what we're about. But we would love to see a real innovative security token out there that we have a strong interest in trading. Now, in order to do that, we need to do that legally in the US. We need to establish a ATS broker-dealer, alternative trading system broker-dealer entity. And therefore, there's a few out there already established by other players in anticipation of the growing STO, security token offering, or security tokens in general. So we are also laying that foundation. And when that industry is ripe and ready to get bigger, I guarantee you we will be in that industry as well.
Clearly, they're for the long run, but let's talk about the problems that crypto exchanges, for example, are facing nowadays. We're speaking in a year that wash trading was very much a leading term in that respect. And again, traditional finance experts will say that have argued, and the SEC has argued that there's so much wash trading in the sphere that it's impossible to regulate that. Is it true?
Well, here's what I would say. If you go to CoinMarketCap, which is an excellent website that highlights not only tokens, but exchanges, you can see there's thousands of exchanges out there. I think there needs to be a distinction for an exchange like OKCoin that conducts fiat to token trading, meaning US dollar to Bitcoin trading, spot trading. And we do operate a 24/7 market. But, fiat exchanges like ourselves, Kraken, Gemini, Coinbase, I think we operate under different frameworks. Because number one, we need to work with the banks, which are also very regulated. So I think there's definitely a lot more, I would say, visibility, transparency in those trades of a fiat exchange. And our volume has been probably averaging, 2 or 3 weeks ago, we hit our high of $40 million of trading a day. And so we're getting up there. I don't know what the trading number is today, but yesterday it was about $7 million. And so that's the base that we're operating on, and that's what we want to grow. We would love more people to use their bank account to send US dollars to our US dollar bank account. And with that, they can start trading into Bitcoins or even liquidate from cryptocurrency and withdraw US dollars to their bank accounts.
Firstly, that's one way actually to solve all that problem of, I call it the bad press of wash trading. Do you say, or do you think that, why aren't more exchanges doing what OKCoin is doing?
Well, first of all, to get a license to withdraw fiat and not just token to token.
I know, but maybe that's the way to go.
Yeah, I'll tell you what else. You have to watch the regulated exchange because they are doing KYC properly, and then you can understand which money are getting in and out of the exchange. Whereas the exchanges that are not fully regulated, and the KYC is not really in a bank level, maybe in fake ID level. But those exchanges that you cannot understand when you are watching the transaction in and out, for who are they belong, then you have questions about, is that real? Who is this belong? Is it just to manipulate volumes? So this is the problem. But once you have a regulated exchange, and once you can withdraw fiat and put fiat into the exchange, then this is no longer really an issue of the volume.
No longer an issue of the volume entirely. Tim, wondering yeah, go ahead.
Yeah, if I could just add, and I'll add it as more as a suggestion or a good practice or a public service announcement, maybe. But we as also consumers have the option of where we want to conduct our business. Or I see exchanges like a supermarket, and you want to buy apples and oranges and food and whatnot. We have the option to go to today over 1,000 exchanges. But naturally, OKCoin is centered on being a fiat exchange. Bring your US dollars, bring your euros, and we'll help you trade into cryptocurrency and vice versa. So, you need to decide which supermarket you want to go to. There are hundreds and probably 1,000 token-to-token only exchanges. They don't work with the bank accounts because they don't need a trading account that collects US dollars and euros because they don't touch fiat. They don't touch fiat. And I bet these exchanges believe that these tokens are actually just digital goods. And therefore, with the countries that they're operating in, it is still a little wait and see. Maybe the regulations are not as exact. They have not defined Bitcoin as a convertible virtual currency, as in the US, where it's already regulated since 2013 at least. So I think that's how they're operating. They see it as trading of comic books. They see it as trading of Beanie Babies. Right. They don't see it as trading of money. And I think that's where the global regulators need to come in and see how they want to define Bitcoin. It's already been out for over 10 years. The wait and see approach is kind of running its course, and they need to decide what to do with it.
Which one it is. Two more things, or you wanted to say?
Yeah, I just wanted to ask you a question, actually, regarding your supermarket. But when there's the other side of the token, may I say, that when people are going to choose an exchange, the regulated one will also probably be the one who will report to the tax authorities and to each and every authority about your activity. So many people would like to go to the supermarket who will never report their activities, and they prefer to go only token to token, but to do their business quietly and go home. And wouldn't you say this is the price you pay for regulation, for regulated exchanges and going through fiat system?
Well, in the US, the IRS came out with their guidance
Yeah.
as guidelines recently, but I'm talking about the actually April 2014 guidance.
Right.
So they came out also very early saying that Bitcoin as well as cryptocurrencies are a good, meaning if you sell a good with a gain, it is taxable. And so various countries will also come out with tax guidelines and tax requirements. And in the US, I'm a US citizen. Even if I go abroad to make profits, believe it or not, that's a taxable income, taxable event for me as a US citizen. So it doesn't matter where I made that gain. That's a taxable item that I must report and do. So, you know, it's the rules of our society that we must abide. OKCoin emphasizes that we want customers that abide by their regulations. We are a US company. We must abide by our US regulations. And I think that's the crux of all these discussions.
Finally, Tim, one last question, because you blogged about China, and I think it's no secret that China is probably ahead in the game when it comes to national digital coins. They most likely will launch one in the next couple of months. Do you think that move will eventually propel regulators in the United States, albeit not being cryptocurrency, but again, do you think that will propel the United States to move a bit faster?
I don't think that is the catalyst for regulations in the US. The regulators in the US do their homework. They study what is happening in the industry. It's very systematic, right? And being a former regulator, you know what the playbook is. You do a risk assessment, you size up the risk, you establish mitigating controls, and then you go ahead and execute it. That's risk-based supervision in a nutshell. So I think what China is doing is simply, they have studied blockchain. They have picked out the strengths that they want out of the blockchain and going to use it for their purpose. That's all it is. You know, same can be said of Facebook. They have studied the blockchain. They want elements so that it can support their ecosystem. You know, the US, the Federal Reserve they have a program right now called Payments 2020, or, you know, it's for the future, how to improve faster payments. And they're going to study the blockchain, but it sounds like they don't want to use the blockchain. It's their discretion. But everyone has a plan, and that's what they're going to execute.
Entirely so. That said, you'll probably be there when it happens. Tim of OKCoin, I cannot thank CEO of OKCoin. I want to thank you so much for joining us today on Block TV. This has been fascinating, and hope to have you on again in the future. Thank you for being with us.
Likewise. Thank you so much.
For more news and updates, follow us on Twitter.